Did you know that if you invested on Meta's IPO on 18th of May 2012, you would 18x your money? In this video, I will break down the Meta's business model, we will go through the latest earnings release, and I will explain why I think Meta is $1,500 stock in the future. Now you might be wondering, why do you want to listen to me? I've been investing in the stock market for 5 years, and here you can see my returns year to date and 1 year returns comparing to the S&P 500 benchmark. You probably click on this video because you are not satisfied with 7% return from S&P 500 ETF. And you are in the right place, because here I will be sharing the research and we will be discussing the compounding machines which could bring your portfolio to the next level. What's going on, investors? Hopefully guys are doing well out there. Welcome back to another video. Today we are talking about Meta stock. Let's start. Meta is one of the company which could be proud that billions and billions of people is using these products. Meta owns Facebook, Messenger, Instagram, WhatsApp, Threads, Meta AI, Oculus with their Reality Labs division. In terms of the latest earnings results, Meta just obliterated earnings expectations of Wall Street. The Wall Street was expecting $6.77. Meanwhile, Meta is coming with $8.02. Just unbelievable earnings per share beat. From the revenue perspective, the Wall Street was expecting a little bit more than $47 billion. Meanwhile, Meta came with $48.4 billion. Absolutely amazing numbers. Segments results, as I mentioned, the Meta is mostly an advertising company. In Q4 of 2024, the advertising revenue was $38.7 billion. And in Q4 2024, the advertising revenue climbed to $46.7 billion. Most of the money is coming from family of apps, which includes Facebook, Instagram, $21 billion in Q4 of 2023, and in the latest quarter, $28 billion growth. Absolutely unbelievable growth. In terms of Reality Labs, the losses continue to expand to almost $5 billion in losses. This is the moonshot of Zuck, and Wall Street was punishing Zuck when he just started the investment in Metaverse. But right now this seems totally okay with the Wall Street, because the family of apps is just a printing machine. Operating margin expanded from 41% to 48%. Absolutely mind-blowing operating margin. Coming to advertising revenue by user segments, here we see the growth across the board. The US and Canada, with very large base, is still growing 18%. We had a US election in Q4. This was a tailwind for the advertising revenue. For the Europe, 21.8%. For the Asia Pacific, 23.2% growth. And for the rest of the world, 26.7%. Absolutely unbelievable double-digit numbers. The bear case for the Meta stock was for a long time that Meta cannot expand more daily active people, and still this is keep happening and keep happening. In the Q4 2023, 3.19 billion people is using Meta's products on a daily basis, and in the very latest quarter, 3.35 billion people. Now here I need to keep in mind that Meta is calculating this daily active people by their special algorithm, by their special AI, and they are not really disclosing how this algorithm works. So take this information as a grain of salt. Family average revenue per person keep climbing from $12.33 per person to $14.25 per person. This is absolutely unbelievable growth. Ad impression delivered year-over-year percentage change is declining. Now I would like to explain here. This is basically when the Meta is exposing the ads on Facebook or Instagram. So this number could not keep growing, because people sooner or later will be irritated by the amount of advertisement they are being exposed. That's why this number could go down, and I'm okay with that. But this one, average price per ad year-over-year percentage change, is keep climbing, and this is very nice to see, because this number theoretically could climb until infinity. The Meta is just taking inflation into the account, keep raising the prices, because they have the best recommendation algorithm, because they have the best targeting advertisement, and if advertising wants to advertise this small business, there is no other place to go except Meta or Google. And it seems like Meta AI is really working. Their recommendation algorithm is just amazing. This will allow them to keep increasing the price, and this is what we can see. The price increase for the worldwide is 14%, and we can see across the board, developed world, Europe, Asia Pacific, rest of the world, everywhere double-digit growth. Absolutely amazing to see. From the expenses perspective, the Meta is just doing amazing job. What Zuck did with the company is absolutely impressive. You can see for general and administrative from 10% go to 2% percentage of revenue. So general and administrative percentage of revenue is now taking only 2%. Marketing and sales goes from 14% to 7%. Meta keeps investing into research and development, which is absolutely fine with me because I'm invested in the company, because I expect that the Zuck will take the money, reinvest them into the business, build amazing products, and finally generate a return on investment from these products. Net income skyrocketed from 14 billion to 20.8 billion dollars. This is absolutely ridiculous numbers. Diluted earnings per share went from 5.33 to 8.02. In terms of the capital expenditures, in 2023, Zuck spent $28 billion, and in 2024, more than $39 billion, and the projection for the next financial year for 2025 from Zuck is 60 to 65 billion dollars for capital expenditure. This is absolutely sky high number, and need to keep in mind that Meta does not have a cloud business like Amazon, Google, Microsoft. Meta is just advertising company. So this 60 to 65 billion dollars will be invested in training of Llama for their virtual reality capabilities, and also in one of the latest press releases, Zuck mentioned that they are going to go to the humanoid robotics business. Absolutely exciting times to be invested in Meta. Now, large capital expenditure of course is affecting the free cash flow. Net cash provided by operating activities was almost $28 billion. Meanwhile, we invested $14 billion for the purchases, property and equipment. So finally we are coming with $13.1 billion for free cash flow, comparing to $11.5 billion in Q4 of 2023. Here for the free cash flow we do not see the significant growth, but this is okay because the capital expenditures right now is needed, and all the big tech CEO is saying that it would be a mistake if you do not invest in AI right now, even though you are not clearly see the path to ROI. But for Meta, we can obviously see the path how they can take the return on investment, because the operating margins for their advertising business is now just went to the moon. Absolutely ridiculous. Now I would take a moment to talk about the Meta Quest 3. The ratings here is very nice, 4.5 out of 5. Seems people like it. But from my perspective, I believe more in this kind of glasses. Right now, these glasses is providing the capability of taking a photo, taking a video, live stream, listening for the music, calling. I believe that with continuous R&D like this, with continuous capital expenditures like this, Meta will be able to build much more features in this kind of glasses. And just like my glasses, I would be able to switch my glasses into AI glasses, and I would be able to get much more capabilities. Right now, I think these 4 capabilities is not enough to spend $300 to change to these glasses, but I believe that in the future, the amount of capabilities will definitely expand, and this will make a case for the B2C business, where Meta will be able to sell these glasses and then charge for services, just like Apple is doing with their iPhones. Now coming to the valuation model, and as you can see, I have a table here, and this table is visualizing 5-year returns, CAGR every year during these 5 years, risk for the different companies, and I have many companies here which I already calculated the intrinsic value and the potential return in the next 5 years. So let me know in the comments if you want me to create the video about how I created this valuation model, and I can directly share it with you guys. So please share in the comment below. But we are coming to the Meta valuation model. Now for the revenue, I put the growth from 13% coming down to 12%. For net income margin, in the latest quarter, Meta reported 43% net income margin. I'm putting 40% to be a little bit more conservative. I do not really believe 43% is realistic. For the PE, I'm putting 25, which is a little bit historically high, but for this kind of growth, for this kind of operating margins, I believe that 25 is well deserved. For the dividend, Meta is paying a small dividend of 0.3% and doing a buybacks of 2%. Now the return in 5 years could be 116% or almost 17% CAGR every year. And if you want to double your money with Meta stock, you need to buy Meta with $749 per share. which is lower than current price, because current price is lower than $700 per share. I believe that in 2029 Meta will be worth $1,500 per share. Of course, there could be risks for recessions. Meta is still an advertising company. If the global recession is coming, recession will definitely affect advertising dollars. The first thing you cut is the advertising. Now, from the technical perspective, the Meta is trading at $694 per share, and you can see this is the monthly chart. The Meta is having the beautiful uptrend, and right now this is a little bit dangerous situation in the top of this uptrend. There could be correction coming. I would usually buy the good companies at the middle of this range or under the middle of this range. If Meta corrects to $300 per share, it would be absolutely a buy. But I believe that Meta is going here by 2029. Meta is going to $1,500 per share. Now, I hope you enjoyed the video. If you did, please click the like button, subscribe to the channel, because I will be publishing many videos like this with analysis, with explanation, with deep dives. So definitely click the notification bell to get the notifications about the new videos, and let me know in the comments if you would like me to check some of your companies. But just drop the ticker down below in the comments. Now, I hope you enjoyed the video. If you did, you can also take a look at Google and Amazon deep dives, which I recently did in the channel. Subscribe to the channel for more deep dives like this. Click the like, drop the ticker in the comments if you would like me to check some of your companies, and I see you in the next video. Bye bye.